So this is, this meets my criteria. Then I have to execute the trade, even though, reason why I point that out, is I have a bias towards the downside, actually, on the Kiwi yen, on a higher time frame. But on a lower time frame, all I'm doing with the pattern trades, okay, all I'm doing here is I'm looking for a pop. That's it. I'm just looking for a short move based off human behavior with Fibonacci ratios. That's it. I'm looking for a short move. And if I can measure if this behavior matches the criteria, so if we get a bat pattern completion, then I'm looking for targets at a Fibonacci ratio from the 382 for target 1 and the 618 for target 2. That's it. That's all I'm looking for. Okay. Now the human behavior that I'm talking about, let's just go over it now with the bat pattern. Before I do that, we've got pound yen. So pound yen, I was looking at, here we go, red box right there. So price action comes up into the red box and we sell. Okay. Now my stop placements were above the X point looking left. You can see I've already rolled those to break even. Right. Why did I do that? Because as price action comes up into our D point completion on double patterns, by the way, at structure looking left, really nice shorting opportunity. Okay. This is what we cover in the live room every single day. These sorts of trades, right? We trade alongside one another and we follow the plan every single day because the plan makes profits. So we do that every day with daily disciplines, practice daily. The byproduct of doing that correctly is profits, right? So that's what we're doing. I don't win all the time, just half. But when I do, it's over 1-to-1, right? Remember from the previous videos. Okay, so we have a positive expectancy. We have an edge, right? We came up, we hit the D point completion, and then price action comes all the way down into a 382, similar to what I'm just about to cover on the Kiwi yen, okay? So price action came down, 382, and then after it hits target 1, what are my rules? Well, we take off half of the position because here we trade 2 targets, okay? Price action comes down, hits the 382, we take off half of our position right here, and then we roll our stops to break even, which is right here where the red box is there. And what I'm looking for is just a little bit more of a move, right? A little bit more of a move down into the 618. If we do get there, it'll be a really good trade. So target ones was about 80, let's just say 85 pips right there. So $160 out of the market right there. Really good trade. And if we can get all the way down into the 618, that will give us an extra 145 pips on the balance of that position. And it's looking pretty good, actually. We've come down, so we follow price action. We come down, come up, this, okay. And then we come down and we close below this low, right? And we're just playing the structure here. Price action right now comes up, pops up right up to this structure level here, okay? Right there. So what I'm looking for is a bias, of course, towards the downside. So we make more profits off this thing. but we follow the rules and we don't do anything else. We take off our position, roll stops to break even, and then we let it do its thing, right? It's going to do 1 or 2 things from here. It's going to stop us out for break even. We walk away with a winning trade. Not bad. $180 on this. Pretty good. Or we'll come down into target 2, giving us a double that. So be quite a good trade there. Back to the Kiwi yen though, 1 hour time frame. So how did I come to this analysis here? Well, what I'm looking for, now I might give some of that profit back, right? That's the nature of the beast we call the markets. I might give some of that back. Price action might come all the way down and knock us out right there. But remember the 50% ratio. I just did the STO, the Star Trading Overview video on that. Remember the 50% profitable trader. We'd be half right. And then our targets will be more than a 1-to-1. And over time, we're going to make money in the markets consistently. Now, here is my low, okay? So this is my impulse leg right here. And then we come down, right? So if I go down to a lower time frame, so it's easy, this candle's throwing this off. If I go down to a 15-minute right here, a lot easier to see. As you can see right there, guys, we come down, right? And then we come all the way back up. Where do we come back up? Where do we come back up into? Structure leaves clues, right? We got structure right here. Previous support becomes new resistance. So we expect the market to head towards the downside, right? Price action is indicating to us that it intends to go lower. So then the question is, well, why did you buy it up then? Because price action met my rules. And I can't do anything else but to come in every single day in my trading time session. Is come in every single day, London market open, and execute that plan every day. Like, there's no choice, right? So once the criteria is met, then I have to buy or I have to sell depending on the setup, right? Here it is, the criteria. Impulse leg, right there. Price action comes all the way up, gives us an impulse leg, okay? Fibonacci swing low to swing high, right there. Price action comes all the way down, giving us a what? 50% B point retracement. Then we get another move towards the upside. So condition 1 is met. Condition 2, what is that? Well, it's a Fibonacci retracement. You should know this. Students of mine already do. Should know this by now. B point right here, and the C point comes up and completes at the 618, right? So now we got 1 and 2 met. What's condition 3? Well, if we get a move all the way down into an 886, so like this, Fibonacci retracement tool, swing low all the way up into swing high, right there. You can see price action coming all the way down right there into a D point completion. And we use the if-then syntax, don't we? So if price action comes all the way down into our D point completion, then, if then, we buy it up no matter what, because it met our criteria. Condition 1, 2, 3, and that's it. Once we have a valid trade opportunity, we have to buy or we have to sell no matter what. Because that means you're executing the plan. Every single day you come in and you trade that plan. You don't deviate from it. You don't do anything else. Why? Because you know that your trade plan produces a profit over time. So don't do anything else but actively trade that which you've tested. Because you want to replicate the results. If you have an edge, then it's up to us to come in every single day and trade with discipline to replicate to replicate that edge. That's what you do as a professional trader. And that's what we do and demonstrate with the Star Live Trading Room, Tuesday to Friday. London market open. Right? So you get to see this every day. Right? So I trust that these videos that I put out valuable to you. If so, please like the video. That helps me tremendously. And if you haven't, please subscribe as well if you like my style of trading. All right. But that's it. So that's the intraday, let's say, trade of the day. It's not the biggest of moves that I'm looking for here. It's about 16 pips for target one if we get there. And 30, let's say 35 pips for target two if we get there too. And see what happens with pound yen. Might be a big payoff, or might just be that 80 pip trade right there. That's it. Until tomorrow, be safe. Oh, for those of you who are coming into the live room tomorrow, I do have an announcement as well. Something that I'm working on that I'm going to be bringing you towards the end of the month. And I'm super excited to bring that to you. It's going to be awesome. All right, until next time, be safe, enjoy life, and I'll talk to you soon. Thank you so much.